All right, so the world feels like it's on fire, right? Headlines are screaming crisis. What is a disciplined investor supposed to do? Well, that's exactly what we're going to break down today, a real blueprint for how to handle all this financial turmoil. It's all about tuning out the noise and sticking to a plan that actually works. So let's dive in. Okay, just imagine for a second. Some major global crisis hits. You see it all over the news. The markets immediately start going crazy. What's that first gut reaction you have about your money? What's the very first thing you do?
Yeah, for a lot of people, probably most of us, the answer is just one word. It's this huge wave of fear that just washes over you. And what does it make you do? You grab your phone, you open your trading app, you're glued to the news, and there's only one thought in your head: sell. And this is where we see that huge difference between what our fear is telling us and what history actually shows us. Our brain is just screaming, the market's collapsing, get out now. But when you look back, the data is pretty clear. Markets are, well, they're incredibly resilient. They have survived world wars, pandemics, massive crashes, you name it. And they almost always tend to bounce back after that first big shock.
So that really gets us to the heart of the first thing we need to tackle, what we can call the panic problem. And honestly, it's the single biggest obstacle to investing successfully over the long haul, especially when things get choppy.
Right, and here's the bottom line. Giving in to that fear and selling everything is, well, it's usually the worst possible thing you can do. And why is that? Because you're basically guaranteeing your losses. You're selling at the very bottom. And this is so important, you almost always miss the rebound. That recovery, it often happens way faster than anyone thinks it will.
Okay, so if reacting to a crisis is the wrong move, what's the right one? Well, the smart play is to prepare for one before it even happens, which brings us right to our next section: how to build your own financial fortress before the storm even gathers. So this fortress, it's really built on two main layers. Step one, you need a solid foundation of cash. That gives you options, it gives you security. And then step two, you add a protective layer on top of that. We're talking about an asset that has a long history of holding its value, especially when currencies get a little shaky, and that's gold.
But how much cash is enough, right? That's the big question. You should be aiming for an emergency fund with enough cash to cover 6 to maybe 12 months of your essential living expenses. And I mean essentials, not your wants, but your needs. This is your buffer. It's what keeps you stable.
And that really gets to the whole point of having that cash reserve. It's about prioritizing stability before you even think about growth. See, when you have this fund, it means you'll never be backed into a corner, forced to sell your long-term investments at the absolute worst time just to cover the bills. Oh, and by the way, having a little bit of actual physical cash on hand, not a bad idea either, just in case. All right, let's talk about that second layer, gold. I mean, for centuries, it's been seen as a store of value. And a relatively small allocation, we're talking maybe 10 to 15% of your total assets, can act as a really powerful hedge. It brings balance when other parts of your portfolio are going haywire. And let's be clear, this isn't about trying to get rich off gold. It's about protection. Okay, so once your defenses are solid, once your fortress is built, we can actually switch from playing defense to playing offense. So let's look at some areas that can actually present some interesting opportunities for growth, even when things feel unstable. If you look back at history, whenever geopolitical tensions start to ramp up, you see a predictable pattern. Government spending in certain key areas just explodes. I mean, think about it, right? Suddenly there are all these new defense contracts. Major infrastructure projects get fast-tracked for national security reasons. And all the logistics and tech needed to make that happen, demand just goes through the roof. Next, let's talk about energy. It's pretty simple. No matter what's going on in the world, we need to keep the lights on. The demand for energy is always there. It's incredibly strong. So if a crisis disrupts the supply chain, guess what happens? Prices can shoot up, and that can mean big profits for energy companies. And finally, just think about the stuff people have to buy no matter what's going on. We're talking about food, medicine, cleaning supplies, all those everyday things.
The demand for these goods is just super stable. So the companies that make them, they often become a kind of safe haven for investors because their business doesn't really depend on the economy being great.
All right, this brings us to our last and, I think, most important section. It's about a single concept that really ties this whole strategy together. And it's what protects you from what is often the biggest threat of all, inflation. So we really need to understand this one crucial idea. It's called pricing power. You can almost think of it as a great company's superpower. It's their ability to raise prices to keep up with inflation. And their customers don't leave, they stick around. Just think about the brands you're super loyal to, the ones you'll buy almost no matter the price. That right there is pricing power. So when you see all that government spending we talked about and global disruptions start making everything more expensive, this is where you want your money to be, in real assets like property, in essential commodities like energy, and of course in those really strong businesses that can protect their bottom line because they have that pricing power. You know, if you only remember one single thing from all of this, please let it be this. After all the charts, all the strategies, all the analysis, the single most important lesson from hundreds of years of financial history really just boils down to 3 simple words. This is the golden rule. Because at the end of the day, real, lasting wealth isn't built in some frantic moment of panic selling, and it's not built on a lucky guess. It's the result of discipline, especially when everyone else is scared. It's the result of patience when everyone else is being impulsive. And it's built on a steady commitment to a long-term plan. And so that leaves us with just one last question you should really ask yourself. Take a hard look at your own financial plan, at your own mindset. When the next crisis comes, and it will, is your plan built to help you be patient, or is it going to leave you wide open to panic?